Inflation angst drags S&P 500 into undergo marketplace. Bonds skid. New York global stocks and government bonds plunged once more on Monday, and the greenback hit two-decade highs, as red-hot U.S. inflation fueled concerns approximately even extra aggressive coverage tightening in a large week for crucial banks, underscoring concerns that tighter monetary situations may additionally cool the U.S. financial system to the factor of bringing on a recession. The gap among U.S. and 10-year Treasury yields inverted on Monday for the first time since April, an incident which could herald an economic contraction. Monday's sell-off driven the U.S. S&P 500 index, which has dropped over 20% for the reason that a current record near into a bear marketplace, and came at the heels of Friday's facts that confirmed U.S. inflation accelerating greater than anticipated in May. The figures unnerved investors and quashed bets that the Federal Reserve was gaining the upper hand in taming hovering expenses. The Fed stated it has got inflation below manage. The Fed doesn't have it beneath manipulate, and they might have misplaced manipulate, said Ken Polcari, leader marketplace strategist at Slate Stone Wealth LLC in Florida. I do not see panic promoting, but, however, it feels like it's coming, Polcari stated, adding that a fall under 3,800 factors inside the S&P 500 index could spur extra investors to escape equities. The Dow Jones Industrial Average tumbled 2.8%, the S&P 500 shed 3.9%, and the Nasdaq Composite plunged 4.7%. An index of world shares dropped 3.7%. As speculation simmers that the Fed should hike hobby charges via 75 basis factors at its June 14-15 policy assembly this week, markets ratcheted up expectancies that U.S. costs might top at around 4% next year, up an eye-watering 100 foundation points from less than weeks ago. Investors are seeking to or expecting where benchmark policy quotes should peak in the United States and different essential economies, as that would assist determine fairness valuations and what kind of further percentage prices may want to fall. European shares tumbled 2.4% to their lowest in more than 3 months, and the Euro Stoxx Volatility Index, an equal in Europe of the US VIX index, additionally known as Wall Street's worry gauge, surged to a 1-month high. The US VIX index additionally leapt to its maximum in over a month. Benchmarks in many nations consisting of the Netherlands have suffered declines of extra than 20% from a latest remaining height. This is taking place notwithstanding the moves which have thus far been taken via imperative banks, stoking fears that they'll have to go more difficult and faster if inflation is to be tamed. The value of that is being an increasing number of seen as decrease boom and probably recession, equity capital leader macro strategist Stuart Cole stated. With inflationary tendencies showing no signs of abating and new mass COVID-19 checking out in China sparking concerns, approximately extra crippling lockdowns and squeezed international deliver chains, traders cut publicity to volatile assets across the board. Credit default change spreads blew out to multi-year highs, at the same time as cryptocurrencies, which includes Bitcoin and Ether, posted double-digit losses, as news that U.S. cryptocurrency lending employer Celsius Network had frozen withdrawals spooked investors. European bonds have been additionally stuck in the broadening debt market sell-off following a hawkish European Central Bank meeting last week, with 2-year German bond yields galloping above 1% for the primary time in more than a decade. GVD, EUR, rising U.S. yields and the flight to protection pushed the greenback index, which measures the value of the greenback against 6 important currencies, to a high closing seen in December 2002. By overdue afternoon, the index was up 0.7% at 105.18 USD. Against the yen, the greenback retreated from Monday's peak of 135 yen and 22 sen, a level not visible in view that October 1998, at the same time as the British pound sank 1.5% after statistics confirmed the UK economy suddenly shrank in April. GBP China lockdowns. This is a massive week for significant banks, with the Fed, Bank of England and Swiss National Bank holding policy meetings. Expectations of even greater competitive charge hikes from vital banks around the sector have led traders to sour on the worldwide increase outlook. Multiple signs of increase in markets slumped on Monday, from era stocks in Hong Kong to the Australian dollar, as traders fled to the perceived safe haven of the US dollar. Investors in Asia focused at the danger of latest coronavirus lockdowns, with Beijing's most populous district of Chaoyang announcing 3 rounds of mass testing to quell a ferocious outbreak that emerged at a bar. Chinese blue chips fell 1.17% and Hong Kong's Hang Seng suffered a 3.39% slide.